Hi everyone, welcome back to my channel Achieving Alpha and welcome back to another video. And in this particular one, I'm going to share some of the few things that I have learned over the last 15 days. And if you are basically connected to the Telegram channel that we have, you must have seen that the market went from 16,400 to 18,350, but still I was quite short. And I publicly admitted that I'm going short on the market. And primarily I was short on Nifty IT and Nifty itself. And Nifty, I told you that it was already in the oversold zone, so you can expect some bounces. So you can see that the current gain that I have is around 1.6 lakhs. This is obviously unrealized gain and this is not realized profit. I haven't really booked that. Now I have booked some of the positions in the last few days and I plan on booking some more partially. But what I'm going to hold long is these puts. Basically, there's 18,000 put for the month of June, which I bought around 250 quantities when the market was hovering above 18,000. That was, I think, a golden chance to accumulate some of these puts. And again, I accumulated the March puts as well, and you can see that they have also started to give really good gains. Now, what I can tell you from here is basically that we are looking at things which are not looking very positive, be it global markets or be it the Indian markets itself. Things are not looking great, and you can see that this negativity has gone a little extra, right? And all thanks to Nifty IT. So if you know that I was short on Nifty IT since mid of December, and I have you can check the public Telegram channel that we have, and I clearly admitted that I'm going short on this. And a lot of people told me that it's not a very good idea to go against the trend. But I clearly told you that I'm not seeing a very healthy, basically a healthy upside, and the upside was kind of with limited volumes. So that's what you can see. And once again, the overall aim of this particular video is not to show off this particular profit. I don't like doing that. But just to tell you that it's not very hard to achieve this, first of all. And secondly, if you play it with the right logical mindset and if you follow proper risk management, then this is clearly possible. So yes, this is what we can see. Now let's talk about Nifty IT. We were talking about this. So you can see that on a daily time frame today, the RSI has gone below 30. So I do expect some bounce back in a day or two. But what was the noticing factor was the monthly RSI, and I clearly told you that this monthly RSI of 88 and 89 is not going to sustain. And that's where I built the positions for Feb and Jan, basically short positions in the middle of December. And I have closed that. You can see that I don't have any open positions in Nifty IT. I closed. I had some shorts in Tech Mahindra and Infosys, which I closed almost about 10 days back, and some of it I closed basically 2 or 3 days back. Okay, another order executed as you can see. So again, booking partial profits is a good idea, I would say, but what you can do to basically play the move on both sides. So I will talk about that and how I would have managed my risk if the market had gone further up. I will also talk about that, but let's talk about first some of the reasons that why I went short. So I will I don't have a presentation, I did not get the time to prepare one, but I will talk about it verbally. So yeah, very firstly, a lot of people might just say that this might be edited, so let me just refresh that for those people. And yes, you can see I refreshed, and you can see that the live panel is running. There is nothing to hide about it. So yes, let's talk about the reasons firstly. So the very first reason that I went short was the low volumes on the Nifty futures chart. So let me show you the Nifty futures chart. Let's go to trading view. It's going to make things more clear. So let's talk about the Nifty futures chart. Sorry for a messed up chart. I know a lot of supports and resistances that are visible. So you can see that the red bars are clearly quite high compared to the green bars. And you can see that from here we basically started the rally. Just have a look at these green bars and you will see that clearly this is not a move which was easy to sustain, because see, any breakout needs a very strong volume to basically sustain. So volume and open interest are two very important components that we have, and we really need those if we want any move to sustain. That's the first thing. Yeah, sorry for the disconnect. I had some audio issues, so hopefully the voice is better now. So the second thing that we got to talk about is that there was a global disconnect. So you would see that the US markets were falling continuously. They are still falling, by the way. But we were sort of making new highs, and these new highs were without volumes and open interest. So there was no some sort of a long build up that I could be, trusting that particular rally. And I had many reasons to go short. Let's talk about the third one. The third reason are the fundamentals. See, the market can't go anywhere in the short run, but if you have a look at my positions, so I bought primarily the put options for June and March, which I think were available at a very cheap rate at that particular time, and the market was hovering above 18,000, and that was a golden opportunity. And anyone who basically goes with the trend would have said that it's all right, the market has given a breakout, we are trading above 18,000, and that's all okay. But what you need to understand is that the rally, if it comes, can come from any of the participants in the market. It could come from the smart money, it could come from the retail money as well. And this one was clearly from the retail money, right? I told you straight and to the point that this is not going to sustain, and I had very high conviction on that. And what was my plan, and what would I have done if things would have gone wrong? I will talk about that. But first of all, let's just talk about the third reasons that you're mentioning, that the fundamentals. So there are a couple of things that you can see here. Firstly, the inflation was rising, not only in India but also in the US. And if that happens, that would basically pressurize the Fed to do some rate hikes. And we have already had a fantastic rally based on liquidity, clearly from March 2020 till now. And the second reason was basically the crude oil. And again, that ties up with the first one, that is inflation. So India being one of the largest importers of crude oil, we basically import a lot of crude oil. And if that goes high, it definitely increases the inflation for us, and that creates more issues. The third one is US dollar. So you could see that the dollar index was continuously rising, and I have talked about this in many particular videos that the dollar index has an inverse correlation with the Indian markets. That's the first thing. And again, one of the things was the VIX was going up when the market was shooting higher. So the market went up above 18,000. The market went up even above 18,300 for a short while. And all of these times, the VIX was continuously increasing. Now, if you're someone who knows how VIX is derived, you might be knowing that the way VIX is derived is that VIX is basically derived from the order book of out of the money options for Nifty. So what happens is that when Nifty is rising and when VIX is rising, and you can clearly see that there is no participation from the smart money, you can clearly say that they are basically accumulating puts, or basically they are accumulating out of the money options for the further expiries. And that's what is another hint that I am not the only one who was buying these particular puts. It was the smart money also who were basically accumulating these puts at higher levels. The fourth reason was again the lack of smart money participation, be it both in cash or in futures and options or derivatives. Now, I have told you clear straight that whenever I saw this particular up move from 16,400 to 18,350, I clearly told you every single day on Telegram that I'm not observing any sort of an action by smart money in this particular rally. And that was sort of missing. Now, a lot of people would argue that retailers could basically drive the stock market, but I need to tell you that in the short run it might be possible, but in the longer run, it is the smart money who will decide where the market will go, and they are basically going to provide direction and liquidity to the market to basically make it go in the direction in which they want it to. So again, lack of smart money participation was the fourth reason. The fifth one was again the general euphoria that has been created. If you have a look at the mutual fund inflow in the month of December, that was at the highest peak. And not only the mutual fund inflow, if you have a look at the FII, DII data in the cash market, that would be pretty much self-explanatory that the FIIs were continuously selling and the DIIs were sort of buying, but that buying was coming through the mutual fund route, and that was indirectly retail participations money. So that's what we could say. And again, that was another reason that the market was looking hard to sustain. Then what I was doing at the high levels was, as I mentioned, and as you can see, I accumulated some of the puts and I bought time. See, I told you that in the shorter run market could go anywhere, but when I know that there is a problem with the fundamentals, I know that I should buy time, and that's the reason that I entered these June and March puts. I did have some Feb puts as well, but you can see today I have exited some. Yesterday and day before yesterday, I also exited some of the Feb puts. So that is the key thing, right? You gotta buy time. And now I will tell you like what I would have done if I kept on buying these puts and if I kept on averaging, and the market would have continued to go up. So what would have happened in that case was that I would basically have made these debit spreads, debit put spreads, and what I would have done was, let's say I shorted 18,000 put option for June. Now let's say that the market continues to go up above 18,300 and it also breaks the all-time high, let's say worst case, that it also breaks 18,600. So in that case, what I would do is I would start shorting 17,500 puts for the month of June. Now what that would do is that would basically limit my loss. So here, let's say I paid 644 rupees of premium to basically buy this particular option. And let's say that I sold 17,500 for some 300 rupees. So my loss in this case is only the premium paid. And that is the max loss that I can have, right? So that is one of the ways of adjusting. Now what I have done today is something which is opposite of that. So I basically bought the puts when the market was at high. And today you can see that the VIX or the implied volatility has risen up quite a bit. So I think that's a very good time to basically sell these particular options at these particular price points. So you can see that this particular one I bought at an average price of around 514, but now I have sold this particular one at 318. I know it has gone up, but I will basically wait for this to cool down. The volatility, once it cools down, this option premium will go down. And in the short term, if I see a bounce, which I am expecting at these particular levels, looking at the global markets and the oversold RSI, I can basically book profits in these. and then I can hold these for longer terms, which is basically the June and the March puts. I've exited all the Feb positions, as you can see. So again, a lot of these reasons are there, and let's talk about some more reasons. So as I mentioned, I bought the naked piece, but I really knew how to manage my risk. Basically, if the market would have gone further up, I would have basically, created the debit spreads and I would have hedged my position. So it was sort of a naked buy, but I had a very high conviction. And even if that conviction broke, I was ready to make it a hedged and basically make it a debit spread. So that's one thing. And again, as I told you, that intermediate bounces would come, and I am expecting one. That's the reason that I have short these particular ones, which is this, and this. And even if the market dips further, I have no issues. I will basically buy some more puts to hedge it. And even if I don't, then I'm completely hedged. Like you can see that the sold quantity is around 150 and the bought quantity is around 400. So again, this sort of a profit is a really decent one in the 15 days. And I told you that these are, really golden opportunities when the market is in a bubble. And I just talked about some of the signs where you can basically, go short with confidence. And if at all the rally continues, I told you how you can manage your risk as well. So I think this is a good way to play the move on both sides. Basically, when you get the cheaper puts, you basically can accumulate those puts, and whenever the market falls and the IV is high, you can sort of make a really good risk is to reward trade by selling the options when the premiums are sort of high. And the reason for selling this third Feb is only because the IV in the third Feb week is quite high, primarily because of the budget. So let's see. I am expecting some bounce back. If at all we dip further below, I have no issues. My loss is really capped, and for a further downside, I am going to enjoy more profit because these puts are going to rise even further. Basically, the March and the June puts. So that is something which I have, and I hope it's a very short video. Once again, let me rephrase that. I know a lot of people might not, believe. Although this is very short profit, I am not that Twitter kind of a trader where daily everyone is making 10 lakhs, and I don't know what people are doing. I don't want to comment on that. So I think this particular video helped you with some of the things and basically told you that why I was short on the market, what was my thinking behind that, and basically if at all you made some good money or based on the view on Nifty short or basically IT short since December, do let me know in the comment section. And as always, it's only for educational purposes. There is no other purpose to basically share this with you. I hope you enjoyed this particular video and learned something out of it. If you did, please consider pressing the like button. And if you are new here and coming up for the first time, subscribe to this channel for more such content. Thank you so much for sticking around till the end. Have a good day. Take care and bye bye.